the agenda. So the first item on the agenda is public comment. Is there anybody from the public who wishes to make a comment? Did we receive any public comment, Chaz, through email or online?
No, we have not.
Okay, excellent. So without anything else being heard, I guess close the public comment section. So next item is the approval of the meeting minutes. So Chaz, did you send all those out? You send the meeting minutes out?
I did. Yes.
Okay, I don't have it to share on the screen. So do we have any changes or additions? Did everybody get a chance to see it?
I didn't hear any responses back and everybody did receive it.
Okay. So should we make a motion? No.
I make a motion that we approve the minutes as presented.
Okay.
And I'll second.
Beautiful. All in favor, say aye or raise your hand.
Aye. Aye.
All opposed? Okay, it sounds like it passes to me. All right, so let's get into the investment report. These figures as of the close of February. February was a short month, so let's just get into it. So I know, Tim, you can't see this on your screen, but there is a list of all of our bonds in a table format. Each bond has a par value of either 2 million. Oh, got Jason joining us. Even says join, so he's sorry.
Terrible.
Mr. Joyner.
Hi there. My phone made me re-download an app, so my apologies. I was not expecting that delay.
That is fine. We were just getting into the meat of the meeting, which is the investment report. So what you'll see in your screen are a list of all of our investments with the settlement date, the maturity date, the par value, which is mostly 2 million. There's one that's 1 million, the coupon rate, the actual rate, which is the yield to maturity purchase column, and then the days to maturity. So those are the first 17 issues. The next bunch of issues are on the next slide here. You can see the maturity dates and the settlement dates, and the description is basically what agency the bonds are with, or if it's a U.S. Treasury.
So Chaz, have the two people on the phone, they've been sent this in email presentation?
This, no, this is not, but I can send it to them. Yeah, we didn't send it ahead of time though.
So for those of you
Yeah, it
on
would be great to look at that ahead of time.
Okay.
You want to send, can you send it to them now?
If I do, you're gonna see all of my work on the
Okay.
screen.
All right, sorry, we can't get it. We'll do it post. Unfortunately, we can't get it to you right now.
All right, so to continue, the total of our investments in federal agency bonds and treasuries is $55 million. The weighted average of the yield to maturity is about 3.07%. We have about $24 million in our local government investment pool, and the yield to maturity as of the end of February is 4.6%. So the total investment row, we have about $79 million between the bonds, treasuries, and LGIP. And the weighted average of that is 3.5%. And the bottom row has the benchmark, which is in our investment policy. That's one of the benchmarks we're trying to meet or exceed. But because everything is inverted with the curves, the 6-month treasury benchmark is 5.17. So it's quite a bit over what we're actually achieving with our yield. But it is an improvement over the last time we did the report back in November 30th of 2022. Back then, our total investment weighted average was 2.86, and today we're at 3.5. So as these investments mature, we've been rolling them over into higher yielding investments, which is bringing those numbers up. Are there any questions on the investments?
I'm curious why we use the 6-month treasury. I mean, none of those loans look like they're anywhere near 6 months. So why would, or not loans, but those investments. So why would we Why wouldn't we use the 1 year or the 2 year?
Well, that's in the policy, which we're going to be going over a little bit later. We can talk about that to see if we want to change that to a different number. But right now, that's what was adopted by council, and that's what's in the policy. And my understanding is when the policy was adopted, they based it on this Washington State model policy that was provided by the I guess the Washington Treasury Department.
So yeah, it seems like it makes it look like it's underperforming because we're using a benchmark that's not congruent with the term of the investments.
Yeah, I think the thing is, normally in a normal interest rate environment where the yield curve is not inverted, it works. 'Cause
Right.
we would have a weighted days to maturity of about 12 months or 18 months, or maybe even a little bit higher than 18 months. And we do have a weighted maturity average higher than 6. But the thing is, I'm going to go over a few slides on the inverted yield curve. Right now, 6 months to a year is like the peak interest rate, and then it starts to drop from there.
Right.
I think that's the next. Oh, so here's a chart, basically the same data. 70% in federal agency bonds or treasuries, and 30% in the LGIP. And the total amount of our investments and money in the bank is, as of the end of February, is $83.67 million. And broken down, when you break that down into its component parts, you can see that the investments is this yellow line, which we started ramping up once interest rates started picking up at the tail end of 21 and 22 to where it is now. The money in our bank is down here, the blue line, and the LGIP is this gray line, and that's just been growing by about $80,000 or $85,000 a month based on the interest earnings in the LGIP. And
So if I'm reading this correctly, does that mean we only have 2-3 million in the primary bank account?
we have 5.7 million in the primary bank account, but we also have 24 million in the LGIP, which is the same as cash. We can get that out the
Okay.
I was talking to a few finance directors about 6 weeks ago about how they're handling their investments, and a few of them were just telling me they just have enough in the bank account to cover payroll and AP because of how good the interest rates are for investments. They're just putting as much as they can in investments and ensuring that they have enough to cover their bills, of course. But they're just trying to earn as much interest earnings as possible to help out the general fund and all the other funds too. So here are some economic indicators. So now, for those of you on the phone, I'm going into the treasury yields, showing the 1 month, 3 months, 6 months, 1 year, 2 year, 10 year, and 30 year yields. There's more than this, but the chart started to get a bit busy. And the main crux of this is if you go back to the beginning of 2022, the yield curve was normal, where the smaller maturities had a lower interest rate. And today you can see that things are a little jumbled up. The 10 and the 30 year have the lowest yield. The 1 month is higher than both of those. And then all the other yields are a bit higher than the 1 month. So it's a little bit different than the historical norm would show. And here's the treasury yield curve from different quarters. I went back to the second quarter of 22. I have the third quarter of 22, fourth quarter of 22, and then the first quarter of 23. And going back 4 quarters back to June, you can see that the yield curve is kind of normal and then starts flattening out when you get to 3, 5, and 7 years. And then you could see that as time went on, it started to flatten even more. And then in the fourth quarter of last year, it inversed. And then the most recent reading shows that it's continuing to be inversed. It's just all the rates are higher than they were 3 months ago, but it more or less follows the same pattern of inversal. Is that a word, inversal? Yeah. So I also do a comparison of the 2-year and 10-year and the 3-month and 10-year treasury yields. Those are supposed to be indicative of upcoming recessions. So the 2 to 10-year yield curve inversed in July of last year, and it stayed inversed, hasn't gone back to above the line since. And the 3-month to 10-year first inversed, looks like it may have done that in August, but it looks like in November it really went through the line, and it's more inversed. So those are 2 signs that we could be having a recession in the next year or so. This is the federal funds upper limit rate going back about 9 years. So you can see they started to raise the yields, and then COVID hit and they dropped them like a rock. And then in 2022, the Fed started raising them again, first by a quarter, then a half, then 3/4, 3/4, 3/4, 3/4, and then another half. And then it looks like when they meet again, they might raise it. They might continue to raise it.
Is your opinion that as well? It may continue to go up.
Well, good thing you asked, because I have
teeing you up here.
19 federal open market committee members. They believe federal funds rate will increase. Well, in 2023, 10 out of the 19 are saying that the target's going to be 5 1/4. 5 out of the 19 are saying 5 3/8. Sorry, I meant 5 1/8, not 5 1/4. And then 5 out of the 19, they're looking at 5 3/8. In 2024, they're looking at that rate coming down to 4 1/8. And in 2025, they're thinking it'll go down to 3 1/8.
What term is this?
This is the overnight. This is basically the
Okay.
federal funds rate.
Okay.
Yeah, so they're really thinking it's going to go up maybe by 0.5% more, and or maybe a little bit higher than that if you take the average of the 10 and the 5, and then that'll be it. But you never know. We're going to be getting our Seattle bi-monthly inflation numbers next week. So we'll see if the 2-month reading is going to be low at 0.1 again, or if it's going to jump up to 0.5 like the national one did last month. We'll know more next week about the Seattle metropolitan region, and we'll see where it goes from there. Oh, speaking of CPI, so looking at the December readings for Seattle, there's a chart here that basically I took from the Bureau of Labor Statistics, for those folks on the phone. And on the top, I just did a quick analysis of where things are. So for the last 12 months from December 22, the Seattle CPI-U was 8.4%. The major drivers of that were food, housing, and motor fuel. For the last 2 months, from November and December of 2022, it only went up by 0.1%, and the major drivers were food away from home, natural gas and propane, and housing. And as you can see in the bottom, the next release for the Seattle area is going to come out next week on March 14th. So we'll be able to update this chart for the next time we meet. And here's a chart of the Washington LGIP versus the federal funds rate. And you can see that it tracks pretty closely with the federal funds rate. It's about 10 basis points lower. So if the federal funds rate's at 4.75, the LGIP is going to be yielding about 4.65 or so. So here's our investment outlook. So for the bonds that we have invested, we have locked in interest earnings for this year of $1.48 million. And that's not including the earnings we're getting off the LGIP, which is about $80,000 to $90,000 every month. For 2024, we have locked in earnings in the bonds of $426,000. And as bonds mature during this year, we'll roll them over and we'll invest them, and then you'll start to see the 2024 numbers start to grow. And like I said, the LGIP tracks closely with that federal funds rate, and it earns about $80,000 to $90,000 a month. February was a short month. It was at 85,000 with a couple more days and they hit 90. And earnings will probably continue to be about this pace until the Federal Reserve governing body changes course. Oh, now we have our mandatory annual review of our investment policy. So for those of you on the phone, I'll just go through this and I'll just go over each section at a time. Can you all see that? We're here on the web.
Yes.
I can see it.
All right, excellent. All right, so policy one is just a policy statement. It is the policy of the city of Oak Harbor to invest public funds in a manner which will provide maximum security with the highest investment return possible while meeting the daily cash flow demands of the city and conforming to all Washington statutes governing the investment of public funds. Seems pretty straightforward to me. Are there any comments or changes to section one?
Not from me.
All righty. All right, number two, scope. The investment policy applies to all financial aspects of the city of Oak Harbor. These funds are accounted for in the city of Oak Harbor's comprehensive annual financial report, which includes the following funds: general fund, special revenue funds, debt service fund, capital projects funds, enterprise funds, internal service funds, trust and agency funds, and any new fund component newly created by the city council, unless it's exempted. Are there any comments or questions on the scope section of the investment policy? All right, hearing none. Prudence. Investments shall be made with judgment and care under circumstances then prevailing which persons of prudence, discretion, and intelligence, oh, there goes me, exercise in the management of their own affairs, not for speculation, but for investment, considering the probable safety of their capital as well as the probable income to be derived. The standard of prudence to be used by investment officials shall be the prudent person and or a prudent investor standard and shall be applied in the context of managing an overall portfolio. Investment officers acting in accordance with written procedures and the investment policy and exercising due diligence shall be relieved of personal responsibility from an individual's security, credit risk, or market price changes, provided deviations from expectations are reported in a timely fashion and appropriate action is taken to control adverse developments. In determining whether an investment official has exercised prudence with respect to an investment decision, the determination shall be made taking into consideration the investment of all funds over which the official had responsibility, rather than a consideration as to the prudence of a single investment, whether the investment decision was consistent with the written policy of the entity. I think that should be and, yeah, but you know.
So moved.
All right. Section 3, change.
You know, I gotta say, like, if you're trying to exercise an actual legitimate review and refresh or whatever of this document, I mean, it kind of feels like you're just checking the box to say, yeah, we did it. But to be honest, if you want us to like actually look at this and think, does this document align with what the mission is today? We should have had this document ahead of the meeting so we could actually review, have questions and notes and ready. I'm looking at my email. I can't see that I've been given this.
Well, that makes sense. We can move this to next meeting, you know, next time we meet and go.
I mean, if you just want to check a box and say, yeah, they signed off, then fine, we can do this. But you know, you don't need to sit here and read us 20 pages. We could do that on our own and then come back and just hit the ones that we have questions or suggestions or clarifications. You know what I mean?
Yeah, that makes sense. I was just reading it out loud because you're on the phone, but
well, I know, but I just can't. I'm in a place where I can't have you, like, I can't have my camera on. I'm still looking at the screen, so I can see what's on the screen. I don't know about anybody else, but I certainly could see my laptop if you could shoot that out in an email too. So
hold on.
I like that idea. And then could it be switched? I mean, I like that. And then in the future, could be switched to not annually, but maybe biannually or something like that as far as the review goes?
Oh, you mean every 2 years?
I mean, I just think as a standing policy for any city committee or any committee that I've ever been involved with, if the people advising or the people attending the committee are expected to engage with a document or a policy, they need to be provided that ahead of time. Otherwise, it's just a cursory, bureaucratic, check the box. Yeah, they looked at it. No possible way. It's no different than somebody's, congressman signing a 3,000 page document that was written overnight. We have to do a better job. So.
Yeah, that's not a problem. I was kind of just going through the first three because I figured those were routine, but I was going to get into the ones where there's more meat, kind of a little bit more in depth, but whatever, I could email it out right now. Let me just do that right now.
I think the document seems, has there anything really changed in code or in the attitude or direction of the city council or the mayor's office? Or, since the last time this was really gone through with a fine tooth comb or whatever, are we expecting there any changes? Has this been gone through with the DEI microscope like every policy document's going through right now? And
let me just send this off. Okay. Make sure I have everybody here. All right, there we go. All right, I just sent it off.
Well, probably the only thing that we talked about that possibly changed is the issue we just talked about. We have a market that's never been done before, so the 6-month target is probably you have any other issues that are, we could still talk about it right now, just kind of bring it up and so you can go ahead and read it through, David, if you want to.
I can kind of skip around now that I just sent it out to everybody, so I give everybody a couple minutes to open it up and
you can look at it more.
We'll tell you what, let me go to that section where it says 6 months. Real quick, where is that thing? Ethics. No, where is that?
It's probably the only obvious. We're looking at a different market.
Hopefully it's OCR, maybe months. Nope, not OCR. Okay, that would be
I
good.
think we have Councilmember Evans on now. Okay.
Oh yeah, he's
Yep, that you do.
Okay.
Well, looking at that 6 month compared to the 1 year, it's pretty darn close, those two numbers. If I'm going off your slide from economic indicators.
Yeah, I'm trying to find exactly where it says the 6 months. I know it does. I just want to be able to. Where is that? I thought it was here.
so then, my next question would be, if the rates are higher for the shorter interest loans, when these roll over, should we be renewing for shorter rather than the longer terms that it looks like they're getting renewed for?
Oh yeah, that's something you guys can talk about for sure. The thing is though, if the thought is that interest rates are going to fall, it might be beneficial to lock in some 2-year or 2.5-year terms now before the interest rates fall. So if we just do like a 6 month or a 9 month, it'll be renewed in that period of time and interest rates may have already fallen. We hadn't locked it in. So that's kind of one of those trade-offs,
Mm-hmm.
Where is that? I know it says 6 months in here. I just gotta find it.
You Control F.
No, I can't. Unfortunately, it's not.
Scan document.
Oh,
Yeah.
Is it section 9 on page 7,
Let's see.
bankers acceptances?
I don't think so. No, it's not that. I'm thinking it should be here though. Like return on investments. I'll find it as we go through it. I'm sure it'll just pop up.
I do kind of like the suggestion of somewhat tabling this till folks can have the time to look it over and use it for next meeting, unless we have to quote unquote approve it in this meeting.
It just says annually. I think
I don't think anyone's gonna nitpick if we waited until next meeting and gave folks a chance. No,
No, nobody's. Yeah.
I mean, because to Jason's point, even though it was emailed out, I mean, he's obviously not gonna be able to read it nor.
yeah, that's fine. I mean, we could wait.
Did it come via email? Because I looked at my email when you sent it out so I could pull it up and I didn't find it. I would have typically read something like that. I just saw the minutes and the
Adopted investment I sent it to, this is, who is this again? Just so I can make sure.
the one speaking is Jason Joyner.
Yeah, Jay Joyner at islandcountywa.gov.
Oh yeah, no, that's definitely the reason it didn't come to me. That's not my email.
Oh, okay. Sorry. Jace, that's the one well, go ahead and give me the email so I can put it in there.
Yeah, it's jason.joyner,
Jason.
Joiner at peoplesbank-wa.com.
Okay, there we go.
I did get it though, David.
All right, there you go. It's sent.
I've received it as well.
But just to clarify, did you just send it out or you're saying you did send it out before the meeting and I just didn't get it?
Oh, I just sent it out like to you about.
Okay. Okay. So I'm not the only one that didn't review it. But we can all review it now. Okay. All right.
No, I think we definitely should take the time to review it and review this at the next meeting.
Okay.
Sounds good to me.
Well, the next meeting wouldn't be for a quarter. Would it be worth just rescheduling this meeting and
Well, I don't
giving
see
us a week to look at it? What?
I don't see why we couldn't wait till next quarter. I mean, I don't think anyone's gonna.
Okay. Well,
I mean, I'm all
my
about
only
meetings,
thought
go
is
into a
if
separate
there was
meeting
a-
again.
If
but
we
I
wanted to
think
make a recommended policy change, we should make that to the board soon. I mean, interest rates are pretty volatile, and if there was an inclination to change direction, I know everybody thinks interest rates are just going to go up, and then plummet right back off. But the only way they're going to do that is if they drive us off a cliff, and I don't think they're going to do that. I mean, I think interest rates are going to have to hover at whatever level they begin to be effective. They're going to have to stay there for a while until there's a pinnacle and a retraction in the other, on the downside of inflation. So I know everybody, the people betting and the people wanting to keep fanning the flames are trying to say, oh no, they'll come right back down. And I mean, I don't know. I just don't buy that. So my inclination is, I think if people are willing to pay higher interest rates for short term, we're going to be able to renew those short term loans a couple times while people are betting on the come, thinking interest rates are going to come back down. That's just my personal opinion, or professional, I guess you could say.
could you do a combination? You could do some short, some long. Split the difference as they come available.
I think that would probably be a wise idea.
Yeah, you'd be hedging, definitely hedging that way. But I've been wrong a lot of times, so it's not like. But I'm not the only one saying that either. There is certainly some consensus that, it doesn't immediately have its effect, and then it has to take a little while at that higher rate. So. And really, if you think about it, I mean, we're so short-sighted in memory. I wasn't doing business when the rates were higher than they are now, but we've just been in this unusually low rate environment, and that's changing. So I think we're going back more to that long-term 50-year average, and that's higher than where we're at now and not lower.
Yeah, I'd be interested to see some studies on that for sure, so I can dive into it. Yeah. All right, so what's the consensus? Just come back when we meet again in July, or should I just schedule another meeting in a couple of weeks?
I'm all for waiting till.
I'm going to have to defer to Jason because he lives in this world. I do not. And I mean, with the volatility of everything going on, I think we could end up kicking ourselves in the rear end if we wait until another quarter.
Well, how many really, what's the decision that we're going to have to make? How many are going to come up for renewal between now and then? Is it a lot? I mean, do we have any that are up for renewal in the next 90 days?
Oh,
I
yeah.
don't have that list in front of me now.
Let me bring up that list.
That would be the only question. I mean, if we have to make a decision, we're not going to lose it on our whole portfolio. It's going to be, one investment that rolls over and is under the old guidance,
You got one in May. You got a couple in June. You got one here in April. You got one this month, and next week you got one. Let's see what else.
Your current practice now, David, is 2 years? With your
No,
bucket?
no. What I do is I ask the guy, give me 6 months, 9 months, 12 months, 15 months, and 18 months. And then I kind of take a look at what our current days to maturity is and what our current investments are. And I just continue to build the ladder. So if I see that there's a maturity month that's kind of low and the others around it are higher, I just try to fill in that ladder. So we have pretty much the same amount of bonds maturing every month going forward.
So David, I think the laddering of them works out fine. I don't have any objection to you continuing to do it the way that you've been doing it, just keeping those spots filled. I think the question up for debate is really what is our target looking like? And if we're targeting that 6 months versus a different term, which really plays for our reviewing time, but doesn't necessarily make a huge impact on our next actual moves.
Well, it doesn't. And if you're looking at the 6 months versus like, say, the 1 year, I don't know what slide it is. I'm looking at the packet. I mean, it's such a small amount. It's not like half a percentage point or a quarter percentage point.
So with that in mind, I am comfortable just continuing doing what we've been doing, what you are doing, and then reconvene on the next quarterly meeting.
That sounds good to me.
Yes.
I'll support that.
Okay. Sounds good. All right, where were we then? So where's the out agenda? Agenda's over here. All right, so we'll just do the policy.
You're off the hook.
It's fine. I sent it out to everybody, so please look at it. I'm going to see if I can dig up like a Word version of that or something that's OCR'd to make it a little bit faster, because I could have sworn there's a 6 month in there. That's the whole reason we even put it on the tracking, otherwise, like, why did we come up with 6 months, So
If that's a PDF, there are plenty of decent converters on the internet that,
No, I can convert it right now. It'll take like 10 minutes. And whenever you do the conversion, it always messes a few words up.
a little bit. Yeah, you're right.
Yeah, but that's why I'm kind of hoping to find something that's already been done, or a Word version of that. There's got to be a Word version somewhere. So, and also when I was talking to Bainbridge Island about the investment policy, apparently the state has opened up some kind of alternate investment. It's not LGIP. It's kind of like you'd have an account with the state to invest your money in, and it would be invested in the same manner and method the state invests their billions of dollars in. The thing is, though, you need about $20 million to start with, and I don't know if we want to do that, because it's not like LGIP where you can pull it out. It's kind of locked in a bit, and that's a large amount. Now, maybe for Bainbridge, it's fine. Maybe that's good for them, but I'm just bringing it up as an option. They did send me their investment policy with some of those changes to allow that, but I'm not sure if that really fits our needs. But it's just something to think about, I guess.
And be happy if you want to send out info, we can look at it, David.
Yeah. Okay, I will. All right. Well, that's all I got. Are there any other comments? The next meeting is scheduled for July 11th, so we can go over the second quarter. It'll be closed on June 30th, so that's why we try to schedule for a week or two after that, so I can kind of do the math and get all the stuff up to date.
Sounds good.
All righty then.
Hey, thanks a lot, David. Thanks for sending that out, and we'll be ready to look at that next meeting.
All right. Take care.
Thanks for the input.
Thanks, guys.
Thanks, everyone. Bye-bye.
Bye.